Hey guys, and welcome to the Working Money channel. So we got the Bitcoin chart sitting pretty here, not too much movement for Bitcoin. Over the last few days, we have seen a bit of a decline in price, but we've been sitting around 26,000 for a while now. Right now, Bitcoin's trading at $26,100 per coin. A lot of speculation about what's going to happen in the market next. I mean, the S&P 500 is teetering, so that could impact the macro market move for crypto. Nevertheless, we haven't really seen the crypto market react too dramatically. As you guys can see, fear is still sitting at around 38. So people are still apprehensive to be getting into the crypto market. We've got the market cap here, hasn't really moved too much, $1.04 trillion. It's down a little bit, 1.34%. We got the 24-hour volume. That's up significantly, 62.16%, sitting at 23.34 billion. And Bitcoin dominance, again, market moving in tandem, so Bitcoin dominance is remaining relatively stable. As you guys can see in the last 24 hours, we have seen a bit of red on the charts, albeit not by much. So same story as before. With regards to the stock market, looking at the S&P, over the last few days, we have seen a huge turnaround. And so I think this is what's going to spell out the next few months. What happens in the stock market, how confident traditional investors are going to be, and where they decide to move their money. Could be cryptocurrency. They could keep it in cash. We just don't know. And, the narrative that we hear on the mainstream media is also going to speak to that. Of course, it doesn't help that traditionally September is a bearish month for cryptocurrency, and that's been the trend for a while. Rekt Capital has posted this. Okay, Bitcoin could follow the same bearish fractal from 2019 to drop lower in this macro range. So the 2019 bearish macro range, looking at this, guys, of course, we got to discount this because this was a black swan event, the beer flu shutdowns. But, taking a look at what Rekt Capital here is pointing out. So if I throw Bitcoin on the weekly, we really can see it. He demonstrates it really quite eloquently here on the chart. So taking this fractal pattern, and I'm just going to take it up to the top here, just to show you guys what he is looking at here. Now, throwing this on, and I mean, we can throw it on this high, they're pretty much roughly the same price. So throwing this up, what does this show us? And, in terms of time frame too, I'm going to throw it on the second high, just to show you guys what the time frame would be. If we take the trend from today and bring it all the way to, well, let's say we top out here, that would bring us to March 2025, but more likely somewhere in and around here, October 2025. So still some time away. But time-wise, guys, this checks out, okay? For the Bitcoin top, meaning the rest of the altcoins will likely rally too at this particular point in time. But what would we see before then? More of a downturn. So we could, in fact, see a Bitcoin worth $20,000, maybe breaching that $20,000 mark. And maybe that's where we'll see a lot of buying pressure before we see that move up. Now, will Bitcoin come back down? It's amazing how well these fractal patterns match up with today's trend here. Could Bitcoin come right back down here, which would denote a price of roughly $16,600? I mean, anything's a possibility. This was a black swan event, as I had mentioned before. So I don't know. Unless we do see another black swan, which I guess we could. Chances are we probably won't see Bitcoin go down that far. But, this retracement here to the $20,000 level, we've seen it in the past. It is not unprecedented. September, October, November, I mean, usually the fall is generally bearish unless we're in a bull year. Where would this bring us, guys? I mean, going above the 1.618 could, in fact, bring us to a high for Bitcoin of anywhere between $118,000 per coin and $129,000 per coin. So kind of in between these two measurements, the 2.618 and the 1.618. I don't want to really focus on this, though. I am more interested in this retracement before an uptrend. And I mean, again, it's going to depend where the stock market goes. This is just the S&P 500. If we look at the Dow Jones on the weekly, guys, also looking fairly bearish. So maybe something to be paying attention to, courtesy of Rekt Capital here. Noodle's also bringing this up, $40,000 to $50,000 by June and July after the halving. So this is down the road several months, another cycle's representation. Bitcoin is programmed for this scarcity over time, increase in production cost. Its value comes with its scarcity. So by the time we do see that halving, guys, that's when we will see that Bitcoin price move up. So September, October, possibly November, accumulation phase, guys. Buying the cryptos now is what's going to make us rich in the coming years. So hope you guys are stocking up. And if you want to see what my portfolio is looking like, you can follow me, patreon.com/workingmoney channel. Michael Branch here, posting this. XRP surpasses Bitcoin and Ethereum in daily transactions. And guys, total transactions have crossed the 2.6 billion mark. In a recent interview at the Apex Dev Summit in Amsterdam, Marcus Infranger, Vice President of RippleX Growth, discussed the state of the XRP ledger and developments in the XRPL ecosystem. He talked about the interoperability, of course. Transactions happen in 3 to 5 seconds, and that's been reliable over a decade. It was also mentioned down here in the interview, there are over 1 million transactions a day now, and 2.6 billion transactions have been facilitated on the XRP ledger. That is more than Ethereum, by the way. From the outset, it's a very efficient blockchain. Despite this massive feat, Infranger confirm that improving the performance of the XRP ledger is the utmost important for RippleX developers. So, despite their successes, they're still not sitting on their laurels. They're obviously realizing there is competition out there. And so continuing to develop on the XRP ledger is of utmost importance. According to him, RippleX and the community of developers are constantly working to improve the infrastructure. So that's just a little bit of information there with regards to an XRP ledger update hitting over 2.6 billion transactions. Of course, blowing Bitcoin and Ethereum out of the water. So wanted to thank Michael Branch for posting that. ISO Goat here posting this. In case you guys were wondering, we are still eyeing November 2023 for a massive ISO 20022 upgrade in Europe, okay? So he reposted this, okay? This was coming from Ross Jones, Global Head of Payment Product Management, discussing ISO 20022, and it looks like this is from a LinkedIn post. For now, focus now turns to November, where we will see SEPA upgrading to ISO 20022 and the next cross-border payments and reporting release, the CBPR R2. He notes down here, I've recently wrote an article discussing how corporates can prepare for ISO 20022. So guys, corporate clients obviously equate to big money. Here's another screen grab. Most of the banks now advise corporates to migrate to the latest Common Global Implementation, or CGI, ISO 20022 version, and then gives the version here, in order to benefit from a harmonized cross-border payment experience and the latest value-add services. So notice here they mention cross-border services. The bank adoption is very new, and some global banks like Citi are going to support this version from 2023 onward. Need I remind you guys what we heard back in April of 2023 with Ripple ODL partner launching SEPA payments to Europe. So SEPA here, guys, already connected to Ripple partner Tranglo in Europe specifically, and for European payments specifically. I want to make that clear. Tranglo, a Ripple on-demand liquidity partner and leading cross-border payment provider, has announced the launch of an instant single euro payment area, or SEPA solution, aimed at facilitating lightning-fast SEPA payouts to Europe. So Tranglo did reveal the development in a recent press release. The move marked a significant European expansion for the firm and came as cross-border transactions have increased recently. And so I think at this point we did know that they were eyeing November for this massive implementation. So it's interesting to know, it's still happening, and Ripple partner Tranglo is already integrated for SEPA payments in Europe. Also wanted to mention that Ripple partner Temenos has received an investment grade rating from Fitch Ratings. Temenos, the banking software company, announced that it has received a long-term issuer default rating of BBB with a stable outlook and a senior unsecured rating of BBB from Fitch Ratings. Now, I had to take a look at this. I didn't think BBB or Triple B was necessarily that great. I thought AAA was kind of the A standard here. They go on to say, we are very pleased with the investment grade rating we have received, which confirms our market leadership position, diverse customer base, and high retention rates. Our transition of subscription and growth to SaaS are driving the growth in our recurring revenue and growth and predictability of our free cash flow. This public rating is expected to increase our access to a broad range of financial and capital markets. So I had to look this up because, I thought AAA, AAA, the Fitch rating system breaks entities into two categories, investment grade and non-investment grade. So that is something I didn't know. The investment grade ratings are AAA, companies of exceptionally high quality established with consistent cash flows. AA is still high quality, but still has a low default risk. And what is triple B? I had to look down here. Is BB better than triple B? Triple B national ratings denote a moderate level of default risk relative to other issuers or obligations in the same country or monetary union. Double B national ratings denote an elevated default risk relative to other issuers or obligations in the same country or monetary union. So that is coming from Fitch's website, but it sounds as though Temenos is happy with their rating. So I don't know. There you guys have it. I want to keep moving along. Wrath of Kahneman noted this, guys, with Ripple partner Novati and their new app T-Pay Remit. So it's an app for payments between Australia and Bhutan. The claim here is that Novati optimizes the app, presumably with their XB suite, And as we know, Navati is a Ripple partner. And of course, Bhutan is a Ripple CBDC pilot partner. Interesting possibilities here, but as he's mentioned, nothing is confirmed. So this is just a statement coming out from Navati. Empowering global transactions. We've partnered with T-Bank Limited since 2019 to optimize the T-Pay Remit app, elevating remittances between Australia and Bhutan, transparent, efficient, user-friendly, so on and so forth. Here is the ad for that, and I will link this in the description if you guys are interested in looking into this further. Another Ripple partner, partnering with two very Ripple-connected countries, namely Australia and Bhutan. So wanted to thank the Wrath of Kahneman just for posting that. Also saw this, guys, from Cyprus Demanded Core here on Twitter. Did he just call BTC a plain vanilla crypto? This was a panel discussion, okay? This was coming from the CBDC Revolution, posted just 2 weeks ago, okay? The future of private and public currencies in a global context. And if you guys take a look here on the board in the middle, that is Susan Friedman. This was the fourth and final session of the CBDC Revolution International Implications of Central Bank Digital Currencies Conference. In the session, Professor Barry Buzan, University of California, Susan Friedman from Ripple, and Dr. Zuchen Mao, the Asia House, discussed the challenge that is being potentially posed to public money channels by private sector digital innovation, especially stablecoins and the response of central banks, in using CBDCs for cross-border transfers. So, I mean, it's just remarkable how many times we end up seeing somebody associated with Ripple on these boards or at these conferences or, part of these conversations when it comes to global regulation. When it comes to government's ideas of why you would use a CBDC, Ripple's always there. And we know Ripple, the XRP Ledger has been used to facilitate CBDCs for some countries. Some countries have already piloted CBDCs on the XRP Ledger. So, that part makes sense. But the fact that, Ripple's the only cryptocurrency related company associated with these panels, I think speaks volumes. Here's what he said about Bitcoin and plain vanilla cryptos, guys. Listen to this.
I will start with cryptocurrencies more generally and then move to CBDCs and the future of the dollar. I would start with the observation that history provides ample documentation of the fact that competing private monies are inefficient. One need only think back to the history of free banking in the United States in order to illustrate the point. So on the basis of that historical experience, and others, I do not believe that plain vanilla cryptocurrencies or stablecoins are a threat to the dollar. Plain vanilla cryptos, Bitcoin and its ilk, are too volatile, too expensive to transact with. And stablecoins either are not stable if they're partially collateralized or algorithmically collateralized, or they won't scale if they're over-collateralized. If I have to give you more than £1 to get a token worth £1, that's a bad deal for me.
Okay, and the clip basically stops there. What this is getting me thinking more and more now, and just by watching this clip a third time, I'm starting to get more ideas about where I think Ripple eventually sees XRP going, and it has been a theory that has been floating around the XRP community now. The fact that XRP will be a high stable price, the fact that the World Bank has said XLM and XRP are going to be stable coins, the fact that this guy now is saying, plain vanilla cryptos, and he's saying he's likening Bitcoin and the ilk to being too volatile and that they cannot compete with traditional money because they are too volatile, which means what we have to presume is that the types of cryptocurrencies that are going to be a part of this new financial system are going to have to be stable. And so, if Susan Friedman is sitting on this panel, I would assume that would mean XRP would be part of this system, so much so as that it could not be part of a system with these volatile, plain vanilla cryptos, as this gentleman here points out. So XRP can be part of a system, but will not be volatile. So again, they're talking about a future, guys, where the days of this volatility are going to go away. This is why when I talk about the spec rally, we might not have many of these left. This is why I'm getting into my positions now, really trying to hammer down on those cryptocurrencies that I think can produce huge gains in the future, guys, because again, 99% of cryptocurrencies are going to go to zero or are not going to exist one day, and we'll only have a handful of cryptocurrencies left. Again, another reason why I'm keeping a portion of my XRP for the long term, but for this spec run, also going to be trading part of my XRP. And so guys, I'm going to be showing my patrons my entire portfolio. Again, this time around, and I've said this numerous times now, I feel like I'm beating a dead horse, but vanilla cryptos, Bitcoin, the volatility, they do not want that as part of the financial system. The XRPs of the world, they do want that, but XRP has to command a high enough price in order for it to work. And we've heard David Schwartz say this before, but Crypto Eddie also noticed a lot of nuggets on Quora talking about XRP. Higher prices tend to correlate with higher liquidity. Now, just the other day, I did a video about high liquidity, how Ripple wants to help foster high liquidity for the XRP ledger. And guys, there's a reason for this. They need a highly liquid XRP to facilitate these high value payments. And so the price of XRP right now just isn't there. But there is going to be a point in time when they can use XRP or will use smaller amounts of XRP because it will be commanding a high enough price for these higher value payments. Now, I'm sure you guys are familiar with this one. David Schwartz on Twitter a few years ago saying it can't be dirt cheap. That doesn't make any sense. If XRP costs $1, they'd need 1 million XRP, which would cost $1 million. This is using an example, trying to transfer $1 million. But if XRP costs $1 million, they would only need 1 XRP, which would again cost $1 million. Basically explaining the less XRP they need, the better and more efficient these payments are going to be. And so Crypto Eddie did notice another gold nugget here on Quora from David Schwartz. If banks were to adopt Ripple, which means they have to purchase XRP, would they not want to keep the market price of XRP low? This was the question asked. If XRP is finite, cannot be mined, then wouldn't that hinder mainstream adoption? And David Schwartz writes, no. The price of the XRP you need to make a $1 million payment will always be at least $1 million. So reiterating that same point from Twitter, the truth is precisely the opposite. Higher prices tend to correlate with higher liquidity, which means cheaper payments. So again, why Ripple wants to make the market highly liquid. Imagine if you wanted to use Bitcoin as an immediate currency to buy a house worth $1 million back when Bitcoin was priced at $100. In the process of trying to buy enough Bitcoin to buy the house, you'd push the price up significantly. And when the recipient tried to convert those Bitcoins into their local currency, they'd push the price down significantly. The effect would be so bad that back then it would not have been practical to use Bitcoin to buy a house. So a very clear example here from David Schwartz as to why the market has to be highly liquid. And highly liquid, guys, means a lot of buys and sells, but to the point where the price remains stable. This is why I think now it's all making sense, why the World Bank is considering XRP and XLM those stable coins. They should be liquid enough to be stable, but the price has to be high enough to perform the transactions. So he goes on to say, now with Bitcoin over $10,000, that's a cinch. You can buy $1 million worth of Bitcoin without moving the market significantly because the price is higher, and you need a smaller fraction of the available Bitcoins to do so. So a higher priced asset is a better vehicle for payments, at least if you're targeting high value payments. And guys, this is exactly what Ripple is targeting. So if you had any doubt, well, now maybe it's become a little clearer. The concept of higher liquidity, higher prices, this all correlates together. David Schwartz said this 5 years ago. And so these vanilla cryptos like Bitcoin, the ones that are going to continue to be volatile, they can't have these coins as part of a new financial system. But the coins that by design are supposed to be liquid and supposed to be a high enough price to be able to facilitate these high value transactions, well, those are the ones that they're eyeing. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.